Good morning, this is John Piper with the weekend video clip, and it's Saturday the 1st of February, and we're looking here at a chart of the DAX. We went short the DAX yesterday, so we'll talk about that trade. Few points firstly. As I've said many times, a big call is primarily an educational service. My belief and philosophy is that traders have to understand what they're doing, have to make their own decisions. So when I do a trade, and I mention that to you, then it's not advice, it's something that you need to think about. Do you want to do the trade as well? Etc., etc., because it's ultimately you gain or lose by your actions, and so you have to be in a position to actually judge what you want to do. Yesterday's trade is quite a good example, really. Let me go through the parameters of the trade, or at least the reasons for the trade. The peak came in there just below 9.8 on the DAX. We then saw a pretty clear 5-wave decline. There's a few little niggles, but nothing of any great moment. That looks like a complete 5. Okay, there are alternative candles, but let's forget that for the time being. We then saw a clear A, B, C, and then a very sharp decline. Now that could have been a 5th wave, but that looked complete. And we then saw another A, B, C with the high above 9.4, and that set the scene for the short position I took yesterday. Now, when I issued the report, I'm in Thailand, so it was around 4 or 5 o'clock in the morning UK time. IG was trading around 9,380, which is quite an attractive price. I did take some of that, and I said that if I added to the position, I would send out an alert, which I did around, I think, 8:30 in the morning. Let's go down to a shorter term chart. Okay, here's a 10-minute chart. Here was the actual open. So already it was down to around the 9320s level, to 9320, 9340. There was a gap there which didn't fill. It was actually a kraut gap. There would have been a kraut gap trade. Well, there was a kraut gap trade, but obviously as I went short, that sort of rather knocked that out. Basically, we then waited for I saw a break below 9.3. It then bounced, so I thought I'd wait for a secondary bounce, secondary sell signal. With that then came in. Actually, I think it was slightly lower than that. But anyway, the alert went out around 8:35. At the time, the market was around 9,300 thereabouts. In fact, we saw a bit of a rally, so you could have got slightly better prices if there had been a delay. We then had this 1, 2, 3, 4, 5. Actually, I think at the time, because of course it was quite a wild day really yesterday. You could have counted that differently. I think 1, 2, 3, 4, 5. At this point I thought, well look, we've got 100 points in there almost. It depends where you entered and where you exited. I know some of you have been trading throughout the day with this, selling and buying, closing, etc. And I then sent another alert out just after this low here, I think 5 or 10 minutes before this rally came in. So on that particular occasion, you need to be quite quick, although of course it came back later on, so it depends on what you actually did. Anyway, depending on your entry and exit points, you should have got plus 80, plus 90 if you followed that trade. So that's all well and good. Now, what I didn't expect was the thing was going to leap up quite so hugely after personally I took 50% profits, leaving some in place. Right now, looking at IG, currently around 9,280 thereabouts. So we're basically back to the starting point. Okay, bagged 50% profit. So where should the stop be now? Currently the stop is up here. Again, I'd like to see how the action is on Monday, really. I think we could see a pretty wild week next week. This rally is bigger than I had anticipated, but the market's certainly capable of throwing that kind of stuff in. Incidentally, some people do comment that I keep saying the market will go up, may go down. I find it quite strange because that's what it does. People sort of criticise me for saying, well, it goes up, then it goes down. That is the nature of the market. If you don't like the nature of the market, then maybe you shouldn't be trading markets. Because it is unfortunately what it does. It's bloody irritating. Actually, I wish it didn't. I wish it just went down. I wish it just went down in a straight line, and then I could actually just say it's going down in a straight line, which of course it doesn't do. I try and give a sort of honest appraisal of the market. So as it, sadly, it does go down. It does go up. That's what it does. So I find it hard to understand how else I can explain what the market's going to do, other than by saying what it does do. If you want me to ignore the nature of the market, then I guess we're sort of in Toy Town, and that's not where I want to be particularly. Um, it's just a strange one because I say that's what it does. So I mean, sadly, it's a fact of life. Right, so let's have a look at different markets. Okay, this is the hourly chart of FTSE. So we saw a peak here. This could be a complete 1, a complete 2. It then gets a bit confusing because you'd expect to have 1, 2, 3, but then that's gone too high for a 4. So I guess the alternative is that that's a 1, 2, that it's a 1, 2, 1, 2. I think the biggest concern here, actually, I mean, obviously one's trying to find where it's going to go next. If this is a 1, 2, 1, 2, then first it mustn't go above here, which is around 6580 thereabouts. And secondly, it could just fall away sharply as a third of a third come next week. It's the first trading day of the month on Monday. Often that's when cash comes in the market. If that's swept away by downward forces, then that would be quite a big negative, I think. But right now the pattern is unclear. We're still 50% short of the DAX. Well, I'm still 50% short of the DAX, I should say. So it's just a question of how this pans out. But right now there is some element of confusion because the rally is stronger than I'd have expected. Look at the Dow now. Okay, the pattern on the Dow is confused by the action between here, where there may have been a fifth wave failure, and here, because it looks like it's some kind of corrective sort of A, B type thing, suggesting this is just a corrective C wave. That's possible, of course. It doesn't time with the picture on the DAX and FTSE. But the peak came in there, so that's a 1, 2. I mean, there could be a 3 to there, I suppose, and a 4 and a 5. So again, it's possible that I mean, on the Dow we could well be due a rally. I mean, we saw quite a solid pullback, fell back 100 odd points in the last hour or so. Let's just check the IG. Okay, well, IG's last quote was around the same price, 157.03 thereabouts. So again, there's a case for rally here. In fact, there's a stronger case for rally on the Dow. And I'll be pretty quick to close out actually on Monday on the DAX, depending on what we see. I think there's a case we're going to go lower. We've got the buying coming in for the first of the month, which should be a positive. So we just have to see how it goes, and obviously I'll be sending out. I'll let you know what I'm doing as promptly as I can. In these kind of very fast markets, of course, there's always a delay getting things out to people. It takes time to send an SMS, not much, but a bit. And then, of course, not everybody gets them immediately because of the way nature of phones and people are doing things and etc. 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 So it's not an ideal situation, especially in these really fast markets, which is partly why I think education is what it's all about, and putting you in a position where you can take your own decisions in your own time, which I think is what the key part of the whole process is, really. I guess ultimately, I mean, it would take me shorting the DAX yesterday. It was trade based on what the DAX did yesterday. This is the key point. Markets go up and they go down, but it's what they do in the shorter term in a way that determines what trades I take. So I mean that's the key point, and of course when I actually take a trade, then that crystallizes everything I'm talking about. So to an extent, you can kind of put up with me saying it goes up and it goes down, because it does. I'm sorry to say that, but it does. It's all about the trades you take based on your own criterion, really. The short-term action is quite powerful in the sense that it gives you very good signals with quite low risk, actually. I mean, if you're looking at very short-term 5-minute charts, you can take trades based with very tight stops, which you just can't do that I mean, if you're trying to suggest trades to people, or you can't use it very tight. Because you'd be sending SMS alerts every 5 minutes, probably. It just isn't going to work. There's also a dichotomy or a difficulty in actually having a longer term position and looking at shorter term charts, because you tend to do things. You tend to trade quite a lot, which again is not necessarily a good thing. In fact, I mean, there is a definite issue with choosing your time frame and sticking with that time frame. Again, that's a personal thing. You have to determine your own time frame, decide what's right for you, and and then turn up for work. I mean, a lot of people just don't a lot of traders. I mean, it's more difficult when the timing is not settled. This is one thing that Cameron and Mark offer. They trade at 8 o'clock in the morning or 2:30 in the case of Cameron, and actually having that time to actually turn up for work is a big advantage. You still have to turn up, of course. I mean, it's no good not turning up, but at least it's a more practical stance than trades appearing at any one time of the day, or well, not night. I think we avoid that, but it's obviously a practical issue which traders have to work with. Anyway, we'll go on to the next market now. Okay, look at gold now. It seems to be struggling. I mean, we have got a decent rally, nice spike there. Possible 5 waves, difficult to count it precisely, but it is a good rally, almost $100. But it does seem to be struggling. I mean, even though we see sort of pretty sharp falls yesterday with new equity, new lows on stock markets, gold came nowhere near making new highs. And in fact, the predominant action yesterday was sort of heading downwards. So this does raise quite a big question mark on gold. It seems to be a bit of a dud at the moment. And we'll leave that for now. Right, quite a long report, so I think I'll leave that. I'll call that a day. Hope you found it interesting and useful. That's the whole point of these reports, really, that they are useful to you. The notes of markets being as they are, I make them as useful as I can. But I appreciate that. The notes of markets being as they are, that's not always as possible as it might wish. Anyway, have a great weekend. Thanks for listening, and bye for now.